second, everybody. Not sure if we're live. Sound check, sound check, sound check. Oh, there you go. Finally, are we here? Can you hear me? Alright, and good morning, good evening, good afternoon, students and traders all around the world. This is Mike Costa, the FX boss, and this is Professional Forex Trading Course 101, lesson number, I don't know, 6, 7, 8. Anyway, it's called Uptrend and Downtrend. Never forget, trading is a learnable skill when you learn in the correct way, everybody. And our goal is to bring you from zero to a millionaire trader in 3 years, right? Not tomorrow, not in 1 year, but in a few years' time, in an institutional way. What's that? First the analyst, then the trader. And we are following the manual, right? This was this morning, so everybody, today we have market structure trends, how to read market structure, uptrend and downtrend, lesson number 6. Lesson number 6, uptrend and downtrend, everybody. Before we move forward, never forget you're going to graduate from this very course. Number 1, when you have your chart set up and ready for trading. Number 2, you have a strategy in place, you understand how you win, how you lose, you understand how probabilistic thinking affects your strategy. It's your strategy, you are going to build it. And number 3, you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. Risk disclaimer, this stream, this webinar is not trading or investment advice. We are here to learn, and for homeworks and questions you have my Gmail and you have also Skype. Alright, everybody, never forget the mantra: with the right information, and now you need to repeat yourself, with the right information I can make it in this market, I can become a consistently profitable trader. Alright, so let's open the manual, the thinking process before you trade, whatever currency pair and whatever time frame. Then what pattern are we trading? Then what is the probability of the pattern according to the higher time frame, where the higher time frame controls the smaller time frame. Wow. Different patterns that we can trade: trends, monthly, weekly, daily candlestick formations, didn't learn this yet, crown, Fibonacci sequence, market structure, and so on. Hint: when working on a time frame, if you cannot draw the market wave, then the secret: switch to a higher time frame. You can trade the market wave or the shortened trend. The difference is where you choose the stop loss. Golden nugget: our thinking process affects our perception of the market, right? And this for tomorrow. If the green is not confirmed yet, and if the green gives direction to the red and the red can change easily, it makes sense to put a stop loss on. Wow. Alright, let's get to work, everybody. I'm going to clone the chart, and euro dollar, and out this one, out this one, out, so delete. Alright, uptrend and downtrend. So the lesson today, everybody, is if this is the up market wave, or if this is the down market wave. Alright, and we've learned that in an up market wave the market is going to make higher highs, higher lows in an extension, is going to make lower lows, lower highs in a retracement, and then it's going to push back up and it's going to make the next higher high, higher low, another extension. Remember, everybody? And in a down market wave, the market is going to make lower lows, lower highs in an extension. Then it's going to make higher highs, higher lows in a retracement. And then it's going to make lower lows, lower highs in the next extension. And so on, and so on, and so on. Alright? Now we are, now we are talking uptrend and downtrend. We are talking about what do you want to trade, which one do you want to trade. Make sense, everybody? Now the market wave is visible from the higher time frame, and today we are going to clone. Let's use NZD-CAD. Oh my gosh, NZD-CAD, and there you go. And Ernesto told me this trick from here to here and out, and from here to here and out, and from here to here and out, and from here to here and out. And there you go. Thanks, Ernesto, thank you very much. NZD-CAD daily chart, everybody. NZD-CAD daily chart. Alright. So we're going to do something like this. This is theory now. Alright. This is theory. And this is now the live market. And the question is, where or how should you trade the uptrend and the downtrend? Alright? So what are we trying to understand in here is that you are going to have, in an up market wave, you are going to have an uptrend, then you are going to have a downtrend, short-term downtrend, and then you are going to have the next short-term uptrend. In a down market wave, you are going to have a short-term downtrend first, then you are going to have the short-term uptrend, and then you are going to have the next short-term downtrend. Alright? Now, because we're talking about NZD-CAD, we're going to focus on a down market wave, get rid of this and this and this, and the question is, alright, if I'm going to short the market, we didn't learn yet, but counter trend line break, or counter trend line break, or counter trend line break, or counter trend line break, not this one, counter trend line break, and counter trend line break. Hedge fund trader Shola, are you here with us on YouTube? There is no right or wrong. Alright? Those are all the different entries, everybody. Now, let's make something clear. Alright? As a beginner trader, not a trader yet, as an analyst, you know, as a beginner trader, not a trader yet, as a beginner analyst, you know, or let's call this analyst, right? As a beginner analyst, I must understand that the entry on the market wave was 1, but from the short-term trend I could have multiple entries, and those are the rules. Alright? As a beginner analyst, not a trader yet, I must understand that the entry on the market wave was 1. Which one? The red one. the red one. We tend to, everybody, we tend to mix apples with bananas, make sense? We believe when we are looking spatially, we are looking at the chart, we believe that, oh, this is all the same. Make sense? We tend to mix apples with bananas, we tend to black and color with green, just to separate the entries. Green, this is going to be violet and orange, orange and what else? Blue, maybe not. Blue, alright. We tend to believe, everybody, that, oh, the red entry is the same as the black entry, as the green entry, and the violet entry, and the orange entry, and the blue. Make sense? And you are doing this, you're shorting the market in here, and you are thinking whatever you are thinking. Hello, Allah, how are you? So you're thinking that, oh, you are shorting maybe you are shorting the yellow. Make sense? You have countless TikTokers and YouTubers telling you that, oh, this is a swing, alright? You're going to have the market like this, and the guy is going to put a Fibonacci on the swing, and then the guy is going to say, oh, I'm shorting this one. Make sense, everybody? This is how it goes on YouTube, TikTok and YouTube. Make sense? Somebody's going to do something like this. I've seen this a lot. And they're going to say, oh, we are shorting this. Make sense? Boss, but you said that there is no right or wrong. It's where you put the stop loss. Everybody, listen to me. This misinterpretation of the strategy and the market, it's causing you, now this is really good news because it's not your fault. It's causing you to take small profits. Make sense? This misinterpretation, because maybe this is not the best example, because if you enter here on the black and you enter here on the green and you enter on the violet and you enter on the orange, a la hedge fund trader and everybody else, and you are telling me, oh, I'm trading the yellow pattern, what are you going to do once the market reverses against you? You are doing this already, by the way. What do you do? You are trading the yellow, right? And you short at the black and the market goes against you. What do you do? Or you're shorting at the green and the market goes against you, or the violet or the orange. What do you do when this happens? Type in the chat. Do you let it run like, oh, no big deal, I'm trading the yellow, so no big deal? So if you're entering at the black and the green and the red, the stop loss should be up in here, and if you're entering at the orange, which is a confirmed low on the market wave, or you're entering at the blue, and the stop loss should be now in this example up in here. What do you do when the market goes against you? Do you click the mouse and get out with a small profit, or do you let it run? Ala says, I get out. Exactly. And this is not your fault, everybody, but this is on the TikTok and YouTube videos you are learning and they're showing you the wrong way, right? Maybe not everybody, I don't know. But the grand majority, it's mixing apples with bananas. The gurus too. The gurus and the teachers, not all of them, to be fair, right? Most of them. So as a beginner analyst, Ala, Shola, Ernesto, Clara, Sync, 4K, Yarek if you're here, and everybody else, I must understand that the entry on the market wave was 1. This was the entry on the yellow. Does this make sense? Boss, so if I miss the entry on the red, how can I enter the yellow? Great question. What do you think? Exactly. You cannot. You can not. Give me a second. Yelling already. Calm down. All right. So this is the entry, but from the shortened trend, I could have multiple entries. Everybody, I've been teaching this actively for the last 5 years, 6 years. I don't know a better way how to explain you. You can enter at the black, at the green, at the violet, at the orange, but you must get aware that you are not trading the yellow one anymore, because the entry on the yellow one was the red one, but you can enter the blue. Does this make sense? This takes some time for you to spatially understand. When you're looking at the chart and you're clicking the mouse and you're shorting the market in here, you must figure out, and spatially, what does this mean spatially? That your brain understands when you look at the chart, in here, you know, what am I really trading? What's the pattern? Why is this important? Because the stop loss goes on the pattern traded. Stop loss goes on the pattern traded. Stop loss goes on the pattern traded. Alright? So, skill. If you enter at the green, or if you enter at the violet, and you put the stop loss up in here, if you want to be one of my traders or work with me in the future, hear me out, this is wrong. Boss, but this is the safest place. No, it's not. Who told you this? Who told you this is the safest place? Make sense? Just because, and I've seen this doing to countless people, you know, this would be the market, this would be the market, and the market does something like this, you know, and the guy enter here, and he would put the stop loss up in here. Make sense, everybody? Or even better, you know, let's put another one. So this would be the entry in here. You know, the guy shorts the market in here and puts the stop loss up in here. Wrong stop loss. Boss, but this is the safest place. Who told you? This stop loss is wrong. Make sense, everybody? This stop loss is wrong. Why? Because you are not trading this yellow market wave, and you are not trading maybe this consolidation. Wrong stop loss. Make sense? And if you say, no, I'm right, you're wrong, then I'm going, no, I am telling, I'm shorting consolidation. Well, then you are late. You are entering too late, sorry to tell you. Elvis has left the building, the trace has left the station. You are doing again something wrong. Make sense, everybody? The entry from the market wave was up in here on the yellow, and the shorting the consolidation, the entry was up in here, not down in here. Make sense? I mean, this is common sense. Not, do you agree with me? Does this make sense to you? This is common sense. So what are you trading really? Is the short-term downtrend. High to low, low to high, high to low, low to high, high to low. Whoops. So one more time. high to low, low to high, high to low, low to high, high to low. Right click, green. You are shorting the downtrend. And patterns have rules, right? And the only rule that it's correct is the only one, where is the level that the market is going to violate the pattern. Where is the level? We know the rules on how to identify a downtrend. Rules for confirming a downtrend. We've learned this from before. I need a minimum of 2 lows and 2 highs when the second low is a lower low and the second high is a lower high. Those are the rules. So you've shorted the market down in here, example, and let's make it like this. And now this was you shorting the market, example, and there you go. So where is the level, where is the first level that the market is going to invalidate the pattern? Answer, up in here. Agreed? If the market from down here starts to move up and starts to move up and starts to move up and goes up and breaks the high of the pattern, are we in a downtrend? Are we in a downtrend now, Allah and everybody else? Are we in a downtrend? And if you say no, we are not in a downtrend anymore because the market rule based, it's not making lower lows and lower highs anymore, it just made a higher high, so the pattern, the downtrend is not valid anymore. Do we agree this time that this stop loss is wrong? If you are trading a downtrend, this stop loss is wrong. Uptrend, exactly. And if you go into an incubation account and I give you money to trade and you do something like this, I'm going to ask you and I'm going to yell at you why you did let the market come to this level before you close the trade. Does this make sense? You are sending me your report that you were shorting the downtrend. Until here it's fine. But you put the stop loss up in here, the market reversed and went all this way back up, and I'm going to ask you, well, if you are shorting the downtrend, your strategy, you send me the report, if you are shorting the downtrend, why didn't you get out up in here? Would this make sense? And this is you, it's not your fault, but this is you learning in the wrong way on YouTube and TikTok and Instagram and Facebook and Pinterest and I don't know what else. And then what the retail trader do? Is going to wait and wait and wait and wait and suffer in between. Now the market is going to come up here, you know, stop him out. What is going the trader do? What would you do? What would you do? Anna, what would you do up in here? Buy or sell? Would you buy or sell up in here? What would you do, everybody? This is the market now, this is your brain, and your brain is seeing something like this, and now it's seeing something like this. What would you do? Would you buy up in here? Remember, your brain is seeing the yellow. Would you buy or sell up in here? What would you do? You are shorting a downtrend, you put the stop loss in the wrong place, you let the market come to up in here, the market stopped you out on a nonsense stop loss level, made a higher high. What would you do? Buy. And as soon you buy, thanks for being honest, appreciate. I can work with you if you're honest, everybody. And as soon as you buy, the market goes like this. and start to retrace. Isn't this how it happens? And you are thinking, oh, the broker is against you, and you are thinking, oh, the market is against you, and you are thinking, oh, this market is impossible, and you are thinking bullshit theories that, oh, the broker is stop loss hunting you, and you are thinking that the big guys, the institutions, are after the small retail 5% trader, and so on and so on and so on. Make sense? I'm not arrogant. This is the reality. This is the reality. When the reality is you, again, it's not your fault, don't judge yourself, but you've learned in the wrong way from the wrong YouTubers and the wrong TikTokers. How do you know? Because the market makes logic. Make sense? You bought up in here what? The first extension leg. And once you buy the first extension leg, the market must retrace. So when you are buying, I'm selling. You are doing exactly the opposite with what I'm doing. Everybody, do you want to see a real life example that happened a few weeks ago? And it happened live on trading.live, Euro New Zealand weekly chart. Not Euro, Euro dollar, sorry, Euro dollar weekly chart. You're going to understand now. This was Euro, this is Euro dollar weekly chart, and this was the market. Higher highs, higher lows, higher highs. Alright? Now, this market on the daily, because talking about, now this is the short-term trend. Now look at the market wave, extension, retracement, extension, alright? Do we agree that the black one is a retracement on the yellow market wave? Do we agree? Alright, good. Then we didn't learn yet, but the intermediate students, not beginners anymore, they've seen, alright, the market broke the trend line, you know, this was back in time, and me and beginners, we were shorting euro dollar. This was the signal to go short. And the YouTubers and the TikTokers did something like this. Wrong trend line too. True story. You can watch the recordings. True story. And they were shorting. They were trying to buy the market because they were seeing higher highs, higher lows, which there is. But the trend line break signals, all right, this market is going to fall. Anyway, we were shorting. I'm going to get rid of the black one. We are shorting the market, and we stopped going short in here. Make sense? We were shorting the market, and we were predicting that maybe, probabilistic thinking, this market is going to take out this low 7 times out of 10. So the YouTubers and the TikTokers were buying euro dollar, true story, buying euro dollar. We were shorting, waiting for a bullish candle to form or candlestick formation. We're shorting, and now here the market made the low. You know, down here we stopped shorting. And make sense? Because the red one is the first extension leg. A retracement must come. I don't know when, I don't know how, but it must come. This is how this market works. We stopped shorting the market, and maybe we were preparing to go long. What did the TikTokers and YouTubers do? Type in the chat, what do you think? When me and other beginners were shorting the market, they were trying to buy, they were long. Now we are out shorting because we spatially see that this is the first down extension leg and the market must retrace. We are not shorting anymore. What do you think the TikTokers and YouTubers did? We were shorting the market. Down here we stopped shorting. When we stopped shorting, what did they do? They started what? Oh, the market broke this low and the market broke this low. This is the confirmation of the market to go down. Wrong education. Wrong education. If you are willing to listen to me, wrong education. Exactly, we were out, we stopped selling, they start to selling here. We are planning to buy, wait for the daily chart to show us higher highs, higher lows. We went long when they were shorting, and it's still, it's ongoing. Does this make sense? It's not personal, don't judge yourself, but this is wrong education. Not your fault really, but try to learn in the right way. Wrong perception, exactly, wrong perception. So this is theory, Allah and everybody else, hedge fund trader Allah, this is theory, this happened for real, just in opposite direction. Make sense, everybody? Now guess what is happening right now? Me and the beginner traders are long on euro dollar to some past level of resistance, maybe somewhere up in here, and when the time comes we are going to stop being long and then counter trend line and the daily short-term trend is going to change and we are going to short the market. Those guys, when I'm going to short, those guys are going to buy. Who is paying your bills? Exactly, those guys are paying my bills. Make sense? And this has nothing to do with bullshit theories, it's all about the skill. Boss, what about the news announcements? I don't read news announcements. If you're on the 50-minute chart, we are going to have a class about news, right? Everybody give me a second. We are uptrend and downtrend 48, how to properly draw trend lines, the 3 trend lines, consolidation, how to trade trends. Lesson 11, it's coming, how news events impact what we have learned so far. Alright, everybody? Now, back to here. Back to here. This is the Fibonacci coming in the future. So, I must understand that the entry on the market wave was the red one. So if I enter on the black, green, violet, orange and blue, I'm not trading the market wave anymore, I'm trading the short-term trend. Therefore, I must learn where to put the stop loss in the correct place. And some of you are yelling at me right now, boss, but this is the safest place. It's true, but you are late to the party. You are late to the party. Make sense, everybody? In the second module of the manual, we are going to learn timing and retracement trading. Alright? Now, if you short the market in here at the blue, and if this happens, everybody, do yourself a favor, get rid on the chart, when you're charting, get rid of the yellow one, and we didn't learn yet, and use trend lines. Downtrend line, Yes, this is a suggestion. Uptrend line, downtrend line, alright? So this is how you can spatially understand better your brain, what's happening when you're entering, alright? Exactly, stop loss goes, let's get rid of the black one and this one. If you enter at the green, should the stop loss goes above this high or should the stop loss goes above this high? And let's do it like this. Even better. Alright? Maybe like this, you know. Hedge fund trader Alan, everybody else, if you enter at the green and be very specific on what you are seeing, is the stop loss number 1 the correct stop loss, SL number 1, or is the stop loss number 2 the correct one? Which one? Stop loss number 1 or stop loss number 2? Boss, there is no right or wrong. Oh, on the stop loss it is. And maybe I can do a better job, right? Like this, and like this, and like this. So you are here when you are entering, right? And out of this one, out of this one. Better? You are shorting in the market in here at the green. This is you entering the market. Is the stop loss number 1 the correct stop loss, or is the stop loss number 2 the correct stop loss? And the understanding of this, it's a skill too. Shola number 2, the stop loss number 2 is correct for K. You got it, congratulations to you, you got it. Stop loss number 2. Why? Because not all highs and lows are relevant. This is the relevant high, this is the relevant low, this is the relevant high, this is the relevant low, right? This is the market. And the market goes into a retracement like this and start to fall. So if you put the stop loss on the stop loss number 1 and the market stops you out, did the downtrend, the pattern called downtrend, did the downtrend change? Yes it did. No it didn't. Focus on the circles. Because if you spatially say, oh, I'm not in a downtrend anymore, I'm in an uptrend, then spatially you are not trained enough to understand that, oh, this is the downtrend, and just because the market did something like this, you know, something like this is not an uptrend. This is a retracement. See everybody how easy it is to put the stop loss in the wrong place? See how easy, this is the relevant high, not this high. The circle is not the relevant high. You would put the stop loss on the stop loss number 1. This is your stop loss number 1 here. This is not a relevant high. This is the relevant high. Can you see how easy it is to lose money? Put the stop loss in the wrong place, and you do put the stop loss in the wrong place, and you lose money, and John not, and once the market stops you out, the market goes your way, and you close the chart and you go find another currency pair because you don't understand the market. And John, just because he learned the skill how to, this is training, study charts, figure what is what, figure what is a relevant high, what is not the relevant high. John, just because he learned, John and Jane, a mechanic, Uber driver, architect, whatever, dentist, lawyer, movie star, whatever, John and Jane, just because they learned, gardener, swimming pool teacher, math teacher in the primary school, they just learned how to put the appropriate stop loss. They learned how to put the stop loss at the appropriate level. Just because of this one tiny small skill, they were in a profit now. And me and you close the chart and go on the higher time frame or the lower time frame, or we simply go on another currency pair. And we think, oh, this market is really impossible. Am I ever going to figure out this market? It's a learnable skill. Downtrend stop loss. Not yet, sir, the downtrend is not done yet. Very good. Okay, everybody? What's the time? So, now NZD daily chart, right? Extension, retracement, extension. And right click, yellow, and like this, and like this. We're going to hide the future, you don't know what is what. Alright, but so far we can see the change in the short-term trend. Now we are going to clone the chart, and we are going to go on the 4-hour chart. Alright, this is now the 4-hour chart, and there is no right or wrong on the strategy. Now you say, and me too, alright, I'm going to wait for a retracement to come, and this is the market, retracement. We didn't learn yet trend lines, we're going to learn about this tomorrow. Anyways, on the 4-hour chart, hard highs, hard lows, right, and just maybe alright. Do we agree that the market on the 4-hour chart was making hard highs, hard lows, hard highs, hard lows, but then it made a high, a lower low, lower high, and a lower low, and broke the uptrend line? Do we agree? So on the daily, monitoring the chart, this would be this, right? Same uptrend line. Alright? High to low, low to high, high to low. Do we agree? Type in the chat. Yes, I agree, or type in the chat. No, I disagree. Alright, now, if I am lucky, I'm going to enter a discounter trend line on the market wave. But if I'm at the job, I'm sleeping, I'm walking the dogs, I'm traveling, I'm on vacation, whatever may be the case, so I'm late to the party, and on the 4-hour time frame, the market is down in here. Let's do another one. Right? So this was the entry on the market wave on the daily. Don't confuse the two. But because I'm late to the party, now I cannot enter on the market wave down in here. See? This was the entry. But you could be anywhere down here. This would be the black entry from the previous picture, the blue entry, the violet entry, the orange entry, alright? So, what can I do? I can choose to enter the short-term trend. Yes, 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 yes. Alright? Now, give me a second. So here you have an entry, stop loss on the previous one. And you are charting, so here the market would stop you out. Yes, it's a question about strategy, but just for you to understand, alright? You would make some money, then the market go into retracement, and then here you have another entry, alright? And retracement again. Here you have another entry. Here you have another entry if you want. Not that easy to spot, but here you have another entry, right? And every single time, you know, stop loss up in here, stop loss up in here, and let me see how long it goes, how far it goes, until down in here. So this would be your short-term trend entry, and this would be your short-term trend entry, and then stop loss above in here, stop loss above here. So last time this would be the last entry and the stop loss above in here. And here the market would stop you out. And this loser, it's okay because you would see on the chart that the market is not making lower lows or highs anymore. The market is changing the short-term trend and is going into the next retracement. Alright? And so on, and so on, and so on, and so on, and so on. Can you see it, everybody? The market wave from the daily. Retracement, extension, retracement, extension. Right? Sure, sometimes. No, I'm not saying right or wrong, everybody, because this is a question of the strategy. You know? This one in here, right? This is the example. You would, on the 4 hour, you would short the short-term downtrend, make some money, potentially lost or make some money, doesn't really matter, and then the market is going to go back up, and then short again, make some money, made some money, potentially, you know, shorting the downtrend, made some money, alright, and made some money, or eventually lose, alright. Every single time that the market is changing from extension to retracement, this is going to be you having a loser. Does this make sense? So somebody says, so shorting the market wave is better. No, there is no right or wrong. If the market, everybody, what's the lesson today? If the market is down in here, example, if the market is down in here on the red, which is the market wave, you cannot short the market wave anymore. This would be foolish. This is euro dollar example. Why? Because a retracement must come. Extension, retracement, and then extension and extending and extending and extending. This is euro dollar just in reverse. You must spatially learn this is a retracement leg, and now we are here. And don't compare yourself to a professional trader or advanced. You must understand that, alright, I'm up in here. If I buy the market right now on the yellow, meaning stop loss down in here, make sense? Or even on the short-term trend, with the stop loss up in here, this would be foolish. Make sense, everybody? Not foolish in absolute terms. You know that a retracement is coming, you don't know how, you don't know when, but you know it's going to come, and now that you buy, the market starts to do this. Make sense? And I'm going to ask you, well, why did you buy in here? Beginner trader stock, non-advanced. We are doing this with the risk management strategies. But if you know that the market is going to reverse, and euro dollar, see here? See here, everybody? This is what you should have seen, and we didn't learn yet. New season Dukascopy webinars, but this market was at past resistance, wasn't it? And you going long up in here on the shortened trend, because it's a retracement on the down market wave, this increased your risk. Boss, how do you know? Because the market must retrace. This is the ongoing mantra for you. The market must retrace on the market wave, and the market must retrace on the shortened trend too. So you buying up in here, it's extremely risky, especially when you're going to run past resistance down market wave. And no, absolute, this is probabilistic thinking. 7 times out of 10, this market, when you give the right signals that you're going to learn from the manual, 7 times out of 10 this market push down. It's going to push down, and it did push down. So you buy in the market up in here, or you shorting the market down in here. Those are the unnecessary losers for a beginner trader, and riskier trades for an advanced trader. Does this make sense? Somebody's yelling at me, how do you know? You don't know. You don't know. But when the market is overextending, we've learned this in the previous lessons. Market wave, extension leg, retracement leg, and then start of the extension leg. We've learned all of this in the previous lessons. This is the low, that's the relevant high, that's not the relevant low yet. Only when the market confirms the next high, only and only then this low becomes the relevant low. Alright, and this market, it's overextending, it's overextended, which represents risk in risk management. Why? Because it's ongoing, it's ongoing. The market must retrace, and it is going to retrace. Anyway, everybody, give yourself, don't freak out. Oh, it's too difficult, I don't get it. Give yourself a year to learn. Let's get your expectation. I do not expect to become consistently profitable in the first year. Give yourself a year to learn. Give yourself a year just to learn. Forget about money, making money. Money, it's in the Forex course too, by the way. Forex course 1. Give yourself 1 year just to learn this basic stuff, alright? And that being said, see you back tomorrow. Until tomorrow, stay strong and trade like a responsible boss, because you are the boss of your account. You are not aware yet, but in the advanced course, believe me, you're going to understand. Alright, everybody, see you back tomorrow. Thank you very much.